Hey everyone, welcome back to your Weekly Market Outlook. This is for the 23rd of June 2025. Let's get started with the fundamentals last week in terms of what's happening on the macro front. Their focus is obviously on the monetary policies from the Bank of Japan, Bank of England, as well as the FOMC. And as per previous outlook, we are not expecting any changes, and in terms of the statement, it is exactly as what we had planned for last week as well. So Bank of Japan, Bank of England, and the FOMC unchanged in terms of their interest rates decisions there. And if we take a look at the monetary policy that comes out from there, there's not a lot that they can do there, especially from the FOMC, and especially with whatever is happening over the weekend in Iran. You guys have been following the news. You should know what's happening there. This could actually push oil prices up, and it would push global inflation up in the short term. Okay, so that's basically what happened last week. I think what's happening right now is that not a lot of focus on the macro at this point in time. I think everyone's just focused on the geopolitical tensions developing right now there. We're not looking at any changes in the safe haven flows there as of yet. I think that would happen once the Iranian regime falls, or if there was a counter attack from Iran, likely more of a terrorist attack that happens inside from within the US, and those would be the trigger for any chaos or instability in the market at this point in time, and those are going to be the risks that we need to keep an eye out for this week. All right. Let's take a look at what's going on for this week. Manufacturing numbers are going to be out on Monday. I don't think this is going to have a lot of impact into the market at this point in time. We've got Chair Powell testimony as well. That's going to be on Wednesday and Thursday, Australian time. It would be on Tuesday and Wednesday in the US. Just keep that in mind. Those are going to be the market moving event. Also, the final GDP numbers for the first quarters in the US, we are currently expecting a negative 0.2%. If we compare it from the preliminary numbers, that's negative 0.2%. We're looking at that unchanged at this point in time. But if you compare it to the previous quarter, it's actually a drop from 2.4% to negative 0.2%. This is going to move the market. That's going to be on Thursday. And also on Friday, we're going to be looking at the PCE numbers from the US as we wrap up the month of June. All right, let's quickly move on to the technicals there. The Aussie is currently dropping down at time of recording. This is on the back of Australian government to side with the US government. That's number one. And also whatever is developing in the market right now, that's going to, obviously weaken the Chinese yuan, because, China actually imports 80% of their oil from Iran. So this is currently having an impact from a technical perspective. This is also out of that out of that broadening wedge formation that we're currently looking at. So we're looking at the Aussie stabilizing, at least to a certain degree. We are able to kind of figure out where the Aussie is likely going to go. This is likely going to drop lower. We're at time of recording, it is at 64 cents. We're expecting a drop to 63 cents on the Aussie this week. So that's for the Aussie USD. In terms of resistance, it is still at 65 cents. For the euro, losing a lot of momentum here to the upside. It is still strong. Structurally, it is still in an uptrend, but it is losing a lot of momentum there. Resistance starting to build up at 1.15 and 1.16. There is a possibility that the Euro USD could actually retrace back to 1.3. It would still be above the Ichimoku cloud, but yeah, we could see that retracement happen. So same scenario with the sterling here as well, losing a lot of steam there. The sterling is actually stuck within two order blocks. One at support between 1.31 and 1.32, and as a resistance 1.35 and 1.36. This is the likely range of where the sterling is likely going to be traded. Obviously, this still points to the downside, so I do expect that pullback closer to 1.33, 1.32 to happen earlier this week for the sterling. So point is, what we're anticipating is actually a possibility for a stronger US dollar. Obviously, the show of power, it's more or less a message to the whole world: don't mess with the US. We can do things with precision, And obviously we are using a lot of our military strength here. This is only a fraction of that military strength, and if you're wondering what that fraction is, it's 14 Buster bunker bombs, each weighing 30,000 pounds, or if you're in Australia, that's about 15,000 kilos per bomb. They deployed 14. They deployed the B-2 bombers. They deployed 7 B-2 bombers, 3 for decoys, 7 to attack, 75 precision guided missiles, 125 fighter jets to escort the B-2 bombers, as well as support from the submarines there with the Tomahawk missiles as well to those three targets in Iran. So the US dollar shows strength. Obviously, looking at the US dollar, it is gaining strength at this point in time, and there is room for this one to go up a little bit here. For the yen, it is not a carry trade buy or anything like that. This is more on the US dollar strength on the back of whatever happened over the weekend. This is currently looking at a potential push back to test 148, 149, beyond 148, 149. The strongest resistance is going to come in on 150, 151. That's about March high on the Japanese yen. Support, obviously, we've got 145, 144, 143. But for this week, we are currently looking at a possibility for a stronger US dollar in terms of major FX movement this week. All right, so with that, good luck to trades, and I'll see you soon.